I hope everybody is doing well. I want to take a look at SPX, and I later want to talk about crude oil tankers and First Majestic Silver, and also how those two tie together in a big if-then scenario. So first, before we look at that, let's look at the SP 500 index. When looking right here, we got to the low, and then we started coming up in this uptrend, and I come out Monday pre-market, and I had said the market would move lower on Monday and on Tuesday, and it did. And that was just a simple higher low, right? And the way that I can explain this is pretty simple. But the way that I can explain this is that you run across a situation where the market goes up, then it has a higher low, then it keeps on going up, and then it has another higher low. So at that point, you can say that there is a level of support and resistance right there, and a level of support and resistance right there. And it keeps on doing that. And so we got to that point where we were essentially right here. Monday morning, Monday pre-market, I said the market was going to go down. It was fairly obvious. It was a overbought pullback. But now we get the real test, because we can run across a situation now in which the market could actually lose this uptrend, where we can actually see the market come down here, lose that uptrend, and then stay in this range, and possibly stay in this range, just consolidate, or go down farther and actually lose that uptrend. And so today is really a day where the market will be tested to actually see if that was just a higher low, or whether this is actually the start of the uptrend breaking, and then later some consolidation, then it leads to the market starting to go down. So right now is a big test as to whether these trend lines will stay intact or not. So as you can see, it's right at the bottom of this trend line, and the market is up pre-market, and so it's possible that this trend line stays intact. And you have this if-then scenario in the markets. And what do I mean by that? You have two forces that are pulling it down and up. What is pulling the market up is all this quantitative easing, all this fiscal stimulus, all this monetary stimulus, all this inflationary pressure is pulling the market up. The Fed is pulling the market up. Congress is pulling the market up because of all of the stimulus that they're doing. On the other side of things, you have the fundamentals pulling everything down. You have oil pulling it down. So you have two forces, and it's a big if-then scenario in the market. Are the fundamentals going to win, or is the inflationary pressure going to win? Are the bad fundamentals, the bad economics, going to win and pull the market lower, or the inflationary pressure pull the market up? And that becomes a big question at this point. And you can play this with the if-then scenario. And so if the market keeps on going higher, it's likely that oil is at least going to stay here. Oil right now, we can take a look at oil. Oil is having a bit of an oversold bounce. I'm not making a big deal of it. It's still low, still in the downtrend. It's just having an oversold bounce. But just right there, oil is having an oversold bounce. But is this the start of some consolidation in a range bound, or the start of a new uptrend? That becomes the next question. And on the other hand, it could just go lower from here, and this could just be a lower high, and it could just go lower from here. So there's a if-then scenario that you run across, and that's what we're facing right now in the market. So if we have this inflationary pressure, silver is something that we've been looking at. Silver should go up with all this inflationary pressure. So if it turns out that the inflationary pressure wins and that the market keeps on going up because of all this fiscal stimulus, because of all this monetary stimulus, because the M2 money supply keeps on expanding, then silver is going to be benefited, and also gold will be benefited. So these two are going to be benefited, and they'll go higher. And so if you want a situation where you don't want to fight the Fed and you want to actually bank on the Fed, this is a way to do it. And the way that we've been doing it is that we have a particular underlying, First Majestic Silver. This is the way that we've been trying to play this. And First Majestic Silver is about 70% silver, and then 25% gold, 5% mixed metals, but that's largely what they do. Now, that is one scenario. The other scenario is that the markets all go down lower and the oil keeps on going even lower. And if you run across that scenario, And that's because of the bad economic fundamentals. And they could still bring everything lower. And as we saw during the last sell-off, so we can go XAU, USD. So here's gold right here, and during the last sell-off, I'll go on to the one-day chart, and during the last sell-off, gold sold off. It did not nearly sell off as much as the market, and after the market bottomed, it came right back up, and now it's even higher than where it used to be. And so, on a relative strength basis, it is stronger than the rest of the market, but it still went down a little bit, and that pushed the other ones like First Majestic Silver down. And so you could then run across a scenario where those go down because everybody has margin calls, and they have to pay those. There's a forced liquidation where you run across a liquidity crisis where the inflationary assets like gold go down, the deflationary assets like long-term bonds go down, the cyclical assets go down, the cyclical bonds go down, everything goes down. It's a liquidity crisis. It's a full liquidation. And so you can then run across a scenario where gold goes down. It's not going to go down nearly as much as the market. It's a far safer place to be. So it's going to go down a small amount. But it's not going to keep on going higher because everything else is liquidating. So there are two sides to it. Either the Fed wins, the inflationary pressures win, the market keeps on going up. In that case, gold will go up even more than the market. It's already recovered, and it's at basically 8-year highs or so. And at this point, it could keep on going higher because of those inflationary pressures. So we want to be long XAG, but then on the other hand, it could go down because of a liquidation, not as far down as the other assets, but it could still go down a little bit. So on the other hand, we have NAT, and NAT is up at about $5.45 pre-market, and then we have EuroNav. So these two are something that we were looking at, and looking at these two, these are essentially going to make money when oil goes down because storage costs are going higher, and they make money as storage costs get higher. So storage costs are getting higher, they're going to make more money. So you can create some sort of pairs trade, and that's what I've done, where you're long silver stocks like First Majestic Silver in case that the inflationary pressure wins, and then the market keeps on going higher because there's just so much inflation. In that case, silver and gold will go even higher than the market. They'll go to all-time highs, and that's going to make money. And then, if that's not true, if they get pulled down, not as much as the market, but they still get pulled down a little bit because there's a liquidation crisis, then you can put another piece of your money on the other side of the pairs trade in something like EuroNav or NAT, which is Nordic American Tinker. So we were looking at NAT. Tops. This one's a bit more risky. It's like a penny stock, but look at Tops. Frontline's another one. There are just so many out there. I think this one's a little less liquid. You can try that though. There's so many different ones, but basically pairs trade it. So if the bad economic fundamentals, when the market starts to go down, oil goes down, you make money on one side of the trade. On the other side of the trade, the inflationary pressures, when gold and silver go up, you make money on that side of the trade. So even though we don't know what's going to happen, we're not 100% sure, we understand that it's this if-then scenario, and we are able to pairs trade the if-then scenario. And so that's what I'm looking at right there. Another thing is that on NAT, Nordic American Tinkers, we had a covered call. Basically, stock was at $3.80. It was at $4 in their pre-market, but then it went back down to like $3.70. But I think most people probably could have gotten it at $3.80 like I did. And I just bought the stock. It's up here now. Pre-market is probably up. Yes, up here in the pre-market. So it has gone up a good amount. And I think that within a week, it's basically going to double. We just bought it like last Thursday, and so within a week we can see this thing double. But we did a covered call on it. As I said, that I personally bought the stock before the other people who did a covered call. It's a less risky way of going about it, but you definitely could have done the covered call. And as I said, that tended to be covered call is the same amount of risk, but the reward is smaller. But the reason you do the covered call or just buying the stock is because your probabilities are very high. If you did the covered call, your probabilities, instead of being 50% of making money, your probabilities would have been closer to 80% or 90%. So your probabilities were on your side. And so that in turn gave you a better scenario, but also gave you less reward. But what I want to do is take those and then roll them up, and then consistently just roll those covered calls up if you're doing those because you want to take less risk. If you don't want to take as much risk, or if you want to take more risk, or in turn have lower probabilities, but at the same time have a very large reward, basically making 100% in a week, which is what's starting to happen. I believe I got in probably, this should be Tuesday, Monday. I got in somewhere, I believe somewhere around here. So basically last Thursday, and it's almost doubled. And we could see it double by next Thursday. And so if you want to make 100% a week but take a bit more risk and have lower probabilities, you can do that. And then if you want even lower probabilities but an even higher reward, then you can buy calls on. I do own some calls on Nordic American tankers. And then Euro Nav is another one. As I said, I own some tops. That one is very, you're risking just a couple of pennies on tops, but at the same time, tops is, you're risking a lot less, just a couple of pennies, but it could go to zero, or I think this thing could become a 20 bagger. So again, risk as much as you want on that, but there are different ways of playing. Covered calls are least risky, buying calls is the most risky. Just buying the stock is somewhere in the middle. And you have different stocks to choose from. EuroNav is a blue chip, whereas NAT is more of a mid-grade, so it's a bit more risky. But Tops is the highest risk. I would go with NAT. EuroNav is too big for me. It's personally a big blue chip. NAT, Nordic American Tanker, that's more of a mid-grade. So it's a good, it's not too risky like the penny stocks. But it's on the other hand, a big blue chip that's already bought up a lot with a large market cap like EuroNav. So of course you can find that middle spot. But right there, just looking at SPX, is SPX going to hold this uptrend? That becomes a big question. If it does not, then we have our pair trade ready, and even if it does, we still have our pair trade ready. It's a big if-then scenario, and our pair trade is made to take that on by having a long bias on gold and silver miners. So if the inflationary pressures win, if the market keeps on going up, we make money on that side. On the other side, we have long biases on crude oil tanker stocks, which in turn have a short bias on oil. And so if the market goes down from here, then we can make money. And so this is how you structure a trade that makes money, whether the market goes up or if the market goes down. And so that's just what I'm seeing on the pre-market. But today's a big testing day to see if that was just to see if that uptrend is actually going to break, or if it was just a higher low. So today is a important day to see if it was this higher low. The uptrend is going to break. And remember, crude oil numbers are coming out at 10:30. They're expecting 15.5 million barrels of a build. Last time we got somewhere close to 19 million. I think we might get 19 million again, and those numbers might disappoint, and oil front month could go lower. Other than that, if you have any questions, drop in the comment section. Constructive criticism, go ahead, drop it in the comment section. And thank you for watching, and watch out for this big if-then scenario in the market and how we're playing it with this pairs trade, where we can make money if it goes on the if side and it goes up, or if it goes on the then side and the market starts to go down. Thanks for watching. Stay safe and happy trading.